Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock with news. China's battle with deflationary pressures shows no signs of being won. Over the weekend, China said its inflation rate came in at just 0.3% in the year to October and half the modest August level, still giving them disinflation as they stared deflation in the face. Deflation is already in producer prices, and it got slightly worse in October at minus 2.9%. That's its fastest fall in almost a year. Both movements were small, but they're going in the wrong way for them. Among the CPI items, we can see that food prices rose 2.9% in the year to October, so households are feeling some noticeable inflation pressure. Costs eased for fresh vegetables, but they're still 22% higher than a year ago. Fresh fruit was up 4.7% on that same basis, and pork was up 14%. Prices fell, however, for eggs, milk, beef and lamb, so not much for us to be encouraged about here. And China has sharply raised their local government debt ceiling to 35.5 trillion yuan when they announced the total value of the current program increase, which will be by 10 trillion yuan. But officials did not announce measures to directly stimulate domestic demand, probably disappointing markets that had been hoping that the package would help consumers as well. They did say, however, they're studying such moves, probably waiting to see the impact of the challenge from Trump. Japanese households aren't feeling all that great either. Household spending fell by 1.1% in September from a year ago, but a smaller decline than the 1.9% drop in August and better than market expectations for a 2.1% decrease. This marks the 7th month of reduced household spending, however, in 2024. And Taiwanese exports rose 8.4% from a year ago in October, building on the 4.5% rise in the previous month. Imports are up 6.5%, but that was a slower rate of increase than we've seen for the prior 4 months. Robust Taiwanese trade contrasts with what its unfriendly and jealous neighbour is able to achieve, though. Across the Pacific, Americans remained cautious, taking on new personal debt. That rose by only $6 billion in September, a slowdown from almost $9 billion in August, and well below the expected $14.5 billion increase. The October Canadian labour market report showed a 14.5% rise in jobs, less than expected, but full-time jobs rose more than 25,000 and part-time jobs slipped 11,000 in a virtuous twist. The US Treasury 10-year yield is now just on 4.31% and up 1 basis point from Saturday. A week ago it was at 4.37%. And the price of gold will start today at $2,684 an ounce and down $1 from Saturday. Oil prices are up 50 US cents, just on $70.50 a barrel in the US, while the international Brent price is now just under $74 a barrel. And the Kiwi dollar starts today at 59.6 US cents, down 10 basis points from this time Saturday. Against the Aussie, we're down 10 basis points at 90.6 Australian cents. Against the euro, we've dipped 10 basis points as well to 55.6 euro cents. So that all means our trade-weighted index starts at 68.7, also down 10 basis points from Saturday, but unchanged from a week ago. You get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.